What's going on, everyone? Welcome back to another video. Today we're going to be talking about quarter levels and why you should use them with trading. It's really going to take out a lot of the guesswork of when you should be in the market and when you shouldn't be in the market, as well as what price points to enter and also what price points to exit. It's really going to take out a lot of the guesswork with your trading. So if at any point you find anything helpful in this video, don't forget to smash that like button. And if you want to get notified when I post new videos, that's what that subscribe button is for. So make sure you give that a hard smash as well. So let's just get right into this. So quarter levels are very simple. Think of it like 100 and you just divide it by 25, and basically all of those levels are what we're going to be trading. So you have 0, 2, 5, 5, and then once again 0. So think about it like this. So let's say we post a level right here. We have what? 0, 1600, right? Or 160. That's how I'm going to be referring to these levels. And then let's go to the next one, which would be 1625, right? And then let's do another level at what? 16.5. Okay, or you can go 50, however you want to look at it. It's pretty much the same. And then we'll go 16.75, like so. And we'll do 17, which is the basic 0 again, or like 100. Whoops. Try that again. Let's see. Okay, and then we'll just do a couple more, but basically you're just taking these levels and dividing them by 25, or just doing 25% of every level. So we just did 17, so now we're doing 17.25. Then we'll go 17.5, and we'll just go up to 1800. Why not? 17.75. And now let's do 18. There you go. So now you have all of these quarter levels, and this is where you're going to be looking to either place a trade or exit a trade. So now we can go down to a lower time frame, like the 1 hour, and we can start looking at how the market reacted to these levels. So for instance, we kind of had a retest right here. It didn't happen exactly at this level, so I would have just stayed away from it. Then we have price rejecting in the middle of these levels right here. So once again, no reason to trade. Then we get up here, and now we start to see the possibility of a trade. So we've already seen 2 reasons not to enter a trade, because we're not really sure what's going to happen. It's easy to say after a trade plays out, oh yeah, I would have entered that, look how far it dropped, but it doesn't really happen that way when it's playing out in real time. It's a lot easier to cheat and lie to yourself and say you would have entered this trade because you've already seen that it makes a huge drop. Same with this one right here in this push up. So just keep that in mind when you see all of these big drops. Don't think that just because you've already seen it happen that that's a trade that you would actually enter. You need to be more realistic with yourself and understand where and why you would enter trades, because if you're not already entering trades like this, then why would you assume just because you've seen it happen that the next time you see something like this, you're going to enter it? Because honestly, it's probably not going to happen. So now here is a very interesting spot in the market. We're at that 17.75 area. Price can no longer push up. We're just brick walling right here. We're getting a lot of rejection. Price can no longer push up. So anywhere in this area right here would be a good opportunity to what? Take a trade down to the next whole level. So there's your first trade opportunity right here. Then you can see that price comes up and retests this 7.5 level right here. And you can see that price can no longer push up. It's trying. The buyers are no longer in control. So right here is another opportunity to sell, and you can just take it to the next level. But you don't always have to get out at the next level. You can continue to trail your trade down as many levels as you feel necessary. So this trade up here, you could still have it open all the way down here. Same with this trade, or you can just keep trailing it until you feel a need to get out. That's what's great about these levels, is it gives you a lot of opportunities and a lot of ways for your trades to play out. So let's just keep looking for more trade opportunities. Now we understand that we're in a downtrend, so we're looking for what? Sells, right? That's the first 2 trades that we took are sells because we're in a downtrend. So let's just keep looking for sell opportunities. So you can see right here that price is sitting at this 1700 level, and we have a lot of rejection on the top side, and we can see that price is what? It's just brick walling. So this is another good opportunity to take a trade where? To the next level right here, which you see price hits. Now, once we get down to this level, we can see that what? We have the exact opposite thing. we are what? Having rejection down here. So we are in a downtrend. So maybe this is a trade you want to stay away from because we're in a downtrend. But maybe you want to just take a short little counter trend. That's also up to you. The way that you can trade these levels or these quarter levels is really up to you in the way that you want to do it. So for me, I would definitely take this trade because look at all of the rejection. Price is brick walling. You can just take it up to the very next level and then just wait to see what price does. So then price comes up here, instantly shoots down. We have a little bit rejection right here. And if you really wanted to, you could have taken this trade, but I probably would have stayed away from it because all the price action is in the middle of the level and not really biased on one side. So I would have stayed away from this. And then we get down here. And this is more or less likely where I would want to take a trade because this is a little bit, like I said, in the middle. This is more sitting at that level. We can see that price can't really move up. It's trying. And then right here, we can see that the buyers have just lost all power again. So somewhere in this area would be another good place to enter a trade for another sell down to this level right here. Then we have all of this down here. So again, if you wanted to counter trend trade for a buy, you possibly could. You have rejection here, here, and here. But once again, it's kind of in the middle of that level. So to me, it's kind of a riskier trade. So we'll just put like a question mark on this one. That one is up to you. It would have hit your take profit at this next level. But personally for me, I probably would have stayed out of it. And then we come down into this level right here. And once again, we're in the middle of the level, lots of indecision. So I'm personally just going to stay away from this trade because it just doesn't make sense. Then we can see that price comes up into what? This level here. We see a lot of rejection right here on the top side, but we also have what? A lot of rejection on the bottom side. And even though we're at the top of this level, the indecision should be telling you that price could really go either way at this point. So for me, I would have waited until I saw this reversal pattern right here, and then I would have entered from this point down to the next level of right here. So that's just how I would have traded it. Hopefully this is making sense. You know, we're just looking at these key levels, seeing if there's any rejection or, you know, any reason why we should be continuing to trade with the trend or counter trend trade, things like that. So then we come down to this level right here. We can see that price hit it, came back up into it, hit it again, came right back up. And now we're sitting at this level right here. And we can see that sellers are starting to lose control. But for me, I personally would have just stayed away from this trade because this price action is really, really ugly, but it does show that we are starting to form an uptrend and possibly break structure because we were producing lower lows and lower highs. And now we can see that we're producing higher highs and higher lows. So for me, this is a really good opportunity to see if price is going to shift directions, which it ends up doing. We get a retest of the next level right here, followed by this candle right here showing us that price can no longer push down any further and that the structure break has been confirmed and that price is going to continue going up. So if you didn't enter off of this candle, you also have the possibility of entering here, and you also have the possibility of entering right here. So if you're entering off of this, once again, you're in that 50-50 area where price could go either way. So I probably would stay away from this trade right there, and I would either choose to enter here or up here and go to the next level. And if I was entering this trade, I would just go to this level. So once again, depending on which trade you took, you would either get out here or get out here, which would leave this trade open for the next level up here. You can see that price is in an uptrend now. We're seeing rejection on the bottom side. Sellers can't push price down, and the candles are just showing the right price action for price to continue going up. You get out at the next level. Now, a lot of you might be asking yourself, well, we took this trade we took a sell based off of this right here. So why wouldn't we be looking to sell at this level once again? Well, it's because when we took it here, we were in a downtrend. So it makes sense for this to form to continue pushing price down. But now you'll notice that we are what? We're in an uptrend. So it doesn't make sense for this to form right there because we broke structure. This was the first level break. So why would structure confirm that it wants to go up and then basically the next level up show that it wants to go down? That doesn't really make a lot of sense when it comes in terms of structure. So that's why I would just continue looking for buys, even though we saw this and we traded that same pattern over here. To me, since we're in an uptrend, it just kind of is invalid. So I'm just going to ignore that. And then we see all the rejection over here. you take that to the next level, and then we get the same thing. We get another retest with showing rejection, lots of rejection from this candle right here. You can take this at the close all the way up to the next level, and now we're pretty much in that same spot. We're at the halfway point between these two levels. So now what? We either wait to see what price does up here, or we wait to see what price does down here. So now that you understand what we're looking for, you can use these quarter levels to tell yourself when you should be in or out of the market, or when you should just not even bother looking at a pair because of where it's at. So for me right now, I'm really not looking for any trades on euro, because it's possible that this was a retest and that price is going to shoot up to this quarter level right here. And if it doesn't, then we'll have the possibility of seeing a trade right here. And if not, that's okay, because guess what? We have plenty of other quarter levels that we can wait for price to come to take trades at. So hopefully this makes sense to you guys. We're already on the hour. And you can understand how using these quarter levels can really help you get into a lot of trades. And once again, you don't have to get out at the next level. You can trail your trades for as far as you want. I was just using that as an example. It is your safest option when it comes to trading, is to get in and out of the market as fast as you can with precise take profits and stop losses, things like that. But hopefully all of these little examples in this video will help you understand when to get in and out of the market. So like I said earlier, if you found anything in this video helpful, or you have any questions, leave a like on the video, drop a comment, and if you want to see when I post new videos, smash that subscribe button, because that's what it's there for. And with that being said, I will see you guys in the next video.